Good day everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday the 14th of March 2020, and this is the weekly analysis for Euro, Cable and the Aussie Dollar. And as you can see, for last week it's all a sea of red for all the major pairs against the US dollar, and there was a lot of volatility with a lot of news events for last week and mostly unscheduled. And it started off with continuing COVID-19 global spread and fears of the spread outside of China, especially into Europe and the US. Then at the same time, there was Saudi and Russia oil price war with no resolution over their OPEC meeting. And on Monday, there was a major gap down for a lot of the stock market. And then also the announcements by the US President Trump on their containment for COVID-19 spread in the US, and followed up with a more definitive announcement just last night on Friday with the announcement of their national emergency, declaring a national emergency in the US. And then unscheduled, Fed also added more liquidity to the market. And at the same time, the Bank of England also had a rate cut on Wednesday just before the UK budget announcements. So a lot of uncertainty and activities causing volatility in markets. And let's take a look with the Euro first. And after initial gap up at the start of the week, with US dollar facing some downward pressure, it spiked all the way up to almost hit the 115, but then started to retrace and fell all the way back to the daily 55 EMA near the 110.60 area. And also the ECB had their scheduled rate announcement on Thursday, but of course they didn't cut rates, but provided more QE measures. But most analysts thought that it wasn't enough. It was a bit uncoordinated with the European Union, and also inadequate. So as such, Thursday there was already a move down right to the daily 55 already, and then Friday just continued as well to retest it. So now we'll see if the new support is going to be at the 111 zone, as well as the daily 55. Below that, there's the next round figure at 110. And above that now, this may be an intermediate resistance zone. And the next resistance zone will likely be at the 113 level near the 162 fib extension. So we could also shift the fib retracement to this reversal move to this swing high of the start of year, or just at the end of last year. And it has pulled back into the 62 fib retracement level, which is actually a 38% retracement of this swing move, and it aligns exactly with the daily 55 EMA. We can also take the retracement now for this bullish move, and it has pulled back into the 62% FIB retracement area. So we just shift it over. You'll see that this retracement is a 62% FIB retracement level. So let's use this for now. And next week, there's a G7 meeting via satellite on Monday, followed by the German ZEW economic sentiment on Tuesday, and then the Eurozone final CPI on Wednesday. And this move down was also attributed to a stronger US dollar, which climbed back up after retreating as well. So this caused the euro to retrace lower. Let's take a look at the cable, and cable has suffered worse than the euro, and also same thing after gapping up at the start of the week to right to the 132 level, and from 132 it fell all the way down to 900 over pips to 122.70 area. We can also, so now it's the reversal, it has hit the 200% FIB extension level. We can also take this continuation move, and that's also right at the 200% FIB extension. So the 125 now will likely be an intermediate resistance zone. And below that there is 122 round figure, which will be an support zone. So we'll see the first couple of days on at the start of the week to see how bearish the sentiment is going to be, but at the moment it's possible there could be a strong retracement back up as well to retest 125 or right to the 162 FIB first at the 124.50 area. So the Bank of England made a surprise rate cut of 0.5 basis points on Wednesday, just before the UK budget announcement, and this was following the Federal Reserve surprise rate cut as well the previous week. Alright, so next week there is only one key event, which is the unemployment or employment report on Tuesday, and for the time being the trade negotiations with EU on Brexit is probably moved to the back burner for now, and concerns are more on containment of the spread of the COVID-19. And for the moment, the US has banned travel from Europe into the US for the next 30 days, except for the UK. But they may be considering whether they will impose on the UK as well. So everything is very fluid and dynamic. So always watch out for the news, and especially unscheduled ones. So you don't want to be exposed in the market for too long, so might need to change your strategy to more short-term strategies instead of holding longer term. Okay. All right, let's move on to the Aussie dollar. And Aussie had a fairly wild swing as well, and subsequently fell for the week, and has broken below significant support levels, went through 0.65 and almost reaching 0.61 at a low of 0.6123. So 0.61 round figure is going to be a next support level. It punched through the swing low of the previous week, of previous month, and already hit the 0.63 level before pulling back up. That was right at the start of Monday with the oil price war between Saudi and Russia. So this caused a big volatility of 380 pips before it continued to weaken for the rest of the week. And on Thursday especially, most pairs fell hard along with the global stock market. And it could be stabilizing a bit as the US announced their additional aid or access to over $50 billion as a national emergency was declared. So we'll see whether they're able to calm the markets and provide some stability at the start of next week. And for the Australian economic news, there's the RBA monetary policy minutes that will be released on Tuesday, followed by their employment report on Wednesday. So those are the two key ones. There are also other central banks announcements scheduled this week. The Bank of Japan and the Swiss National Bank on Thursday. So we'll see what their announcements are going to be. And the Bank of Canada already last night made an additional surprise rate cut. They already had a rate cut, a scheduled meeting, and cut their rates following the surprise rate cut by the US Fed. And that was just 9 days ago, and they follow up with another surprise rate cut of another 0.5 basis points last night. So already 5 of the major central banks have already cut rates. So Bank of Japan and Swiss National Bank will be next. And see whether they'll also add further stimulus to their economies. Right, so we can shift this move as well from this swing low to the lowest low of 2019, and this brings us right to 262 fib extension is just below the 0.61 round figure, so that's going to be the next key support level. Alright, we use that reversal fib extension. And as an intermediate resistance, we will look at this area with the 200 fib extension, and along with this swing low here, and that's going to be our resistance zone at the 0.63 area. Alright, so do watch out for my other videos on spot gold and dollar yen, as well as the weekly Ichimoku analysis for euro and cable. And we'll follow up next weekend for the weekly analysis. There won't be any more midweek analysis because everything is very dynamic. So do have a good trading week, and cheers.